Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NASDAQ INC quarterly report. NASDAQ Inc. provides a wide range of businesses and services across various industries worldwide. The company's offerings include market data distribution, historical and real-time index development, and licensing, investor relations, intelligence and governance solutions, sustainability solution, products, insights, and workflow solutions, listing platforms Verifin. A cloud-based platform for detecting money laundering and financial frauds, AxiomSL. A risk data management and regulatory reporting solution, surveillance solutions, SaaS platform, Calypso. A cross-asset trading, treasury, risk, and collateral management, platform trade management and colocation services, equity derivative trading and clearing, cash equity trading, fixed income and commodities trading and clearing, currency trading, exchanges for derivatives, commodities, cash equity, debt, structured products, and exchange-traded products, clearing, settlement, and central depository services. The NASDAQ Inc. stock price has experienced a significant increase over the past year, with a total return of 19.12%. Several key factors have contributed to this growth. A strong Q3 2025 earnings report showed an 11% year-over-year increase in net revenue and a 19% YoY gain in net earnings per share. The company's recurring revenue has also grown, surpassing $3 billion annually, with the majority of its revenue now coming from stable cash flow sources. Additionally, Wall Street analysts have a positive outlook for NDAQ stock, with an average one-year price target of $105.14 USD. Growth in data and index revenue has also been a significant contributor to the company's success, with data revenue driven by new sales, upsells, and usage. Overall, these factors have combined to drive NASDAQ Inc.'s stock price up to an all-time high of $96.67 on August 11, 2025. The primary drivers of revenue growth at NASDAQ can be attributed to several key factors. Market services experienced revenue growth due to increased trading volumes, lower capture rates, and higher transaction rebates. Regulatory technology saw significant growth in 2024 and the first 9 months of 2025, driven by increasing demand for its services. Financial crime also reported substantial growth, while capital markets experienced moderate growth. In addition to these sector-specific drivers, NASDAQ's revenue growth was boosted by increased subscription revenue from new sales and price increases to existing clients. Higher industry trading volumes, lower capture rates, and increased transaction rebates further contributed to the company's revenue growth. On the other hand, revenue decline at NASDAQ can be attributed to a few key factors. Section 31 fees saw a significant decrease in 2024 and a moderate decline in the first 9 months of 2025. U.S. tape plans revenue also declined due to lower audit revenue collection and higher one-time industry-wide adjustments. Furthermore, a decrease in default funds and margin deposits had a negative impact on NASDAQ's revenue. Overall, while there are several factors contributing to NASDAQ's revenue growth and decline, the company's market services and regulatory technology sectors have been key drivers of its success. Its net income and profit margins experienced significant growth. The company's net income has seen a substantial increase, rising by $396 million over the 9 months ended September 30, 2025. This growth is evident in both quarterly and year-to-date figures, with Q3 2025 net income reaching $423 million, up from $305 million in Q3 2024, and YTD 2025 net income totaling $1,269 million, up from $760 million in YTD 2024. Profit margins have also improved significantly. Operating margin has increased to 30% in Q3 2025, up from 23.4% in Q3 2024, and 27.8% for the year-to-date period, up from 25.1%. Net income margin has also seen a notable rise, reaching 21.6% in Q3 2025, up from 16%, and 20.7% YTD, up from 14.2%. The primary drivers of this growth are the decrease in financial investments due to regulatory capital being invested in short-term investments, and the increase in net income from unconsolidated investees. These factors have contributed to a significant improvement in both net income and profit margins, indicating a strong performance by the company over the past year. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash provided by operating activities of $1,630 million, the company is successfully converting profits into cash flow. This positive operating cash flow demonstrates the company's efficiency in managing its resources and generating revenue. The company's debt level and interest expenses have undergone significant changes in recent years. Initially, the total debt obligations decreased from $9,480 million to $9,098 million between two unspecified periods. However, by September 30, 2025, this figure had increased to $14,436 million. Interest expenses also fluctuated during this time. On one hand, interest expense on debt decreased significantly, with a 10.6% decrease from $84 million in 2024 to $269 million for the 9 months ended September 30, 2025. On the other hand, interest expenses increased by $8 million for the same period. Despite these mixed signals, it is clear that the company's debt level and interest expenses have undergone significant changes over time. The company's financial performance was marked by several segments and regions excelling in the past period. Notably, capital access platforms, particularly data and listing services, index business, financial technology segment, market services, and listing services all demonstrated strong performance. Geographically, U.S. operating companies and international products also showed significant growth, with NASDAQ launching 18 new international index products. These areas of success contributed to the company's overall financial standing. Management's outlook on company strategy. The company is anticipating a mixed bag of outcomes due to various factors. On one hand, management expects benefits from ongoing initiatives and transactional activities, as well as a positive impact from the One Big Beautiful Bill Act, OBBBA. Additionally, they anticipate achieving expense synergies through the Adenza restructuring program, with over $150 million in net expense synergies by September 30, 2025. On the other hand, management expects lower operating results due to economic conditions and technological advancements. They also note that certain items will be excluded when evaluating segment performance or making resource allocation decisions. Furthermore, they may be exposed to currency fluctuations, which could impact revenues and operating income. Management is taking steps to optimize efficiencies through a restructuring program initiated in 2023 and expanded in 2024. They are also prudently assessing their capital deployment strategy by balancing internal investments, debt repayments, and shareholder return activity. Overall, the company's outlook is cautious, with management anticipating both benefits and challenges ahead. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In 2024, the company paid out $403 million in dividends, with this amount increasing to $448 million in 2025. The dividend per common share also rose from an unspecified amount in 2024 to up to $0.78 in 2025. In addition to dividend payments, the company has also engaged in share buybacks. In 2025, it repurchased a total of 4,007,607 shares, excluding those withheld for tax obligations, spending a total of $330 million on these purchases. This indicates that the company is actively working to reduce its outstanding share count and potentially increase earnings per share. That concludes the financial summary for NASDAQ INC. Feel free to comment below, and I will be happy to answer them when possible.